Are we live yet? Are we live yet? Okay. I think we live. I think it says we're live. I think it says we're live. Yep. I see Miles tapping in. So yeah, we're live. We're live. We live. I see people tapping in. If y'all can see me, y'all can hear me. Somebody put a 1 in the chat if you can see me, if you can hear me. Got folk tapping in. That's good. What's cracking? Everybody coming in. What's cracking? Everybody coming in. We live, baby. There we go. We live, baby. We here. Y'all switch over the camera on it real quick. Y'all know what to do, man. Y'all share this out. Y'all share this out while we getting together. While we getting everything together, y'all share this out. Hit the little flat, the little paper airplane at the bottom. Hit the little paper airplane and share it with everybody you know. What's up, Corny the Dunn in the building? What's up, nephew? I see Draco in the building. I see Miles in the building. My sweet in the building. Where we at? Who all in here? I see a lot of familiar faces in the building. Okay, y'all yeah, y'all share this out while I'm getting my slides and everything up. Y'all share this out with as many people as you can, especially if it's somebody that's either relatively new to looking at charts. They want to learn more about, like, when you look at the charts, what am I looking at? If you kind of know what you're looking at, but you just want, we gonna go all the way up to like looking at price action a little bit. We're gonna start with what is a candle, and we're gonna go all the way up to what is like price action. We're gonna talk about man, we talk about everything I could think about when I was making these slides when it comes to looking at charts. So share this out with as many people as you can, because we want everybody to get this information for free 99. I see Draco in the building. I know Draco already shared. Matter of fact, Draco probably shared it with me. Draco will be sharing my lives with me. Yeah, man, I'm just getting my slides together, running my mouth. As always, if y'all want the slides, it's a link in my bio. It says Tim Tidbits slides. If you click on that Linktree link, it'll take you to my Linktree link. It says Tim Tidbits slides. You click on that folder, you can download every set of slides that's in there if you want to keep them. You ain't got to give me nothing. You ain't got to give me no email. You ain't got to give me no phone number. You ain't got to give me nothing. I don't want anything. I don't want anything from you. I just want you to have this information for free. You're welcome to go get them slides for free. You're welcome to share them with people. You're welcome to, I don't care if you repost them and pretend like they're your own. I don't care. I just want as many people as possible to get this free information. Get this info for the free 99. You feel me? Y'all just bear with me while I'm setting up still, man. I'm setting up still. I be wanting did I hold up? What did I just do? I just put slides everywhere. Let's try to end this slideshow. I just put slides everywhere, man. I don't know what I just did. Let's try this again. Slides. I usually just swap screen. Usually when I swap screen. Now, how did it get over there? I'm all messed up, man. What's happening? Man, I don't know what I just did, y'all. Y'all bear with me, man. All right, slides. Let's go to slideshow. Slideshow. Okay. Now I want the slide. Let's put this over here. I want the slides on the tablet. Come on, slides. Go to the tablet. Display settings. Swap presentation. Okay. I think I hit duplicate slideshow last time. All right. Now we cooking with Crisco. Okay, got the slides in the right place. Got that in the right place. Let me open up I might open up Trace. I'm going to open up Ninja Trader because I'm going to go into Ninja Trader a little bit. All right, man. Where everybody tapping in from, man, while I'm getting myself together? Where y'all tapping? Somebody put in where y'all tapping in from, because I'm ready now. I'm ready to go. Ninja Trader is pulled up. All right, we got Ninja Trader pulled up. Okay, so we gonna go. Come on. All right. Ninja Trader pulled up. All right, everything I want to mess with pulled up. What's up? What's up, baby?
I don't know if you can see him. I might be delayed though.
If I could see who? Got California in the building. We got Mississippi in the building. We got a lot of Dale in the building. You feel me? Put your L's up. VA in the building. All right, we finna get this thumbnail. Let's get this thumbnail together. Get this thumbnail together. Slides. Let's switch over to slides. Monitor. I don't want to mute, so I'm gonna hit display. Last week I did that. I muted myself out. All right. I want Wacom tablet. That's what I want. There you go. All right, let's get this thumbnail together. But as I hit my mic, while y'all putting in where y'all from, Baton Rouge in the building, Cobb County in the building. We're gonna get this thumbnail together. This gonna be the we're gonna hit the thumbnail. This gonna be the thumbnail here. DMV in the building. Thumbnail time. All right, that's my thumbnail. All right. Shout out everybody tapping in, man. Shout out everybody tapping in. Y'all already know what it is, man. This another episode of Tim Tidbit. I'm gonna jump into my disclaimer first. Then I'm gonna shout my friends out first, second at the beginning, because I might be jumping in between the slides and doing stuff to drive points home, man. So disclaimer. Y'all know what it is. Y'all can say it with me at this point in time. Disclaimer. I am not a financial advisor. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. That's why we're doing these Tim Tidbits, so you can learn how to do your own research. Investing involves considerable risk. You should always consult a financial advisor before making any investment decision. You feel me? You know what I'm saying? Let's shout out my friends and family, man. Y'all know what it is. First up the bat is my little sister, Stock Queenie, aka Kiki Williams, aka the Prophet Sniper. Stock Queenie on Instagram, man. Hit up if you want to join an amazing family, Stocks to Freedom. Hit up Kiki Williams. She's an amazing mentor. She can help you out with a whole lot of stuff. Like, Uncle Charles in the building. Uncle Charles say, do your own research. Do your own research. All right. P Dub Consulting, another part of Stocks to Freedom. Amazing mentor, amazing brother, amazing friend. The Stock Baby, another amazing mentor, part of Stocks to Freedom. You get all three in one package if you join Stocks to Freedom. Hit up Stock Queenie, link in her bio to join Stocks to Freedom. This is not sponsored by Stocks to Freedom. The Come Up series, everybody know what it is. Mark and Jolene GC go live every Tuesday and Thursday on YouTube, on the Come Up series YouTube channel at 8:30 Eastern Standard Time on Tuesdays and Thursdays. Right now, I think they on break, so it's just gonna be on Tuesdays right now. But at the top of the year, it's gonna be back on Tuesday and Thursdays again. First Gen Wealth, aka the runner. Shout out to cousin Zay. This amazing technical trader, amazing with fundamentals. He do amazing research on companies. Amazing technical trader. He got his own group, the Runners. You want to be a part of an amazing family? Hit up Stock Zay on Instagram. Amazing group of people, the Runners. Learn with Lex, another amazing cousin. Learn with Lex, one of the most amazing fundamental traders I know. Break down so many companies, man. Amazing with the fundamentals. Finance on Fleek, Big Draco. Y'all know what it is. Big Draco in the building, man. Millionaire money makers. Put it in the chat, Draco. I'm gonna mess it up. I think it's millionaire money makers. Prolific Prophecy 2018, I think. Put them in the chat, Draco. I'm messing them up. Finance on Fleek on Instagram. That's the only one I know by heart. Big Draco. Uncle Charles Conant. Man, Uncle Charles done made it, y'all. They making fake pages about Uncle Charles. If it don't look like it is right now on this thing here, what I got, Wall Street Consortium, all one word, no underscores, no periods, no dashes, no nothing. His page ain't Charles Conant. His page ain't underscore Wall Street dot. It's just Wall Street Consortium, one word. Right? Uncle Charles done made it, y'all. They making fake pages about him. He's amazing advisor. If you get with this, if you do a consultation with this man, he can have you well on your way to having your financial future in tech. I don't know this last young man personally, but I just relate to him. Wall Street Trapper. He putting out a lot of good information. The Wall Street Trapper, y'all. Let's get into it, man. Let's get into it. What we talking about today? We talk about charts. Did Draco put the other one in the thing? What is it? Million. Did she put it in the chat? Prolific Prophecy 2018. That's one of Draco things. Millionaire Money Makers. That's the other. Millionaire Money Makers on Instagram. And it's another. I see her. I saw her in here. I just ordered her book for my kids. It's called You Always Broke. I think her name Shanty. I don't know her personally. She cool with Draco, so she good people with me. If you cool with Draco, I know you good people. So y'all go support her. It's Shanty Live or something. I don't know. Somebody put it in the chat if you know who I'm talking about. She wrote a book. I just ordered it yesterday for my kids. It's called You Always Broke. Let's get into it, man. What we talk about today? We talk about everything you could think about that I could think about with charts when I was making these slides. All right. What is a chart? This all based off Tim Rogers 101. So if it don't match up with what Wikipedia say, this how I see stuff in my mind, then this how it makes sense to me. What is that? Shanty Changing Lives. I know I messed that up. Shanisha. Oh, Shanisha Changing Lives. Oh man, I was tearing that up. Shanisha Changing Lives. Go to Instagram page. She got a website. She got a emailing list that she's sending out some awesome stock picks coming up soon. She got a book. You Always Broke. I just ordered it yesterday for my kids. I ordered the hard copy. I like to listen to stuff, but I like my kids to actually sit down with books and read them, tactile stuff like that, because my mom used to make me do that, and I appreciate her for that. So I ordered the book for them. Let's get into it, man. For the 99th time, as I said that. What's charts? A chart is a graph showing price action over time. That's how Tim Rogers see it in his mind. If that ain't what Wikipedia say, I don't care. Right? A graph showing price action over time. Right? With a chart, if you're not familiar with charts, you got an x-axis that go along the bottom from left to right. You got the x-axis that go left to right, and you got the y-axis that go from bottom to top. You know what I'm saying? And they meet at y, x, right? Across the bottom, the x-axis, it shows the time. So whatever time frame you're looking at, if you're looking at a day chart, it's going to be Monday, Tuesday, Wednesday, Thursday, Friday across the bottom. If you're looking at an hour chart, it's going to be 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock across the bottom. The time going to be across the bottom, and the price going to be going up from the bottom to the top, up and down, right? The most common data plots that I've seen are do I got this blown up? Is it? Yeah, it's blown up. Okay, want to make sure it's blown up so y'all can see it good. The most common data plots that I've seen illustrated are candles. That's the one that I like the most. I like this one the most. I like candles the most. You got lines. Lines is really good too. If you're not really trying to see all the details of like the high and the low of that period, you just want to see where time closed at during that time frame. Like if you're doing like a lot of swings or longer term investments like over years, you know what I'm saying, you really don't care about the high of the day and the low of the day. You just want to kind of see where it's going. You just want to see where it's going during that day, right? And then the bar is another one. I don't use bars, so it's like the most common one, and the one I'll be talking about today is the candle. Is the candles. Shout out to homie Wall Street Trapper tapped in. Like I say, I don't know this young man personally, but I relate to him. So y'all make sure y'all follow him. The Wall Street Trapper done tapped in with us. Let's go. What are candlesticks? This the ones I'm going to be talking about the most today. Candlesticks. Candlesticks, if you ever pull up a chart, most time you're going to see some little funny looking red lines or some funny looking green lines, just like this right here. You're going to be like, hey, Tim, that look like Chinese to me. But when I look at this, I see a whole lot. These candles talking to me right now. And so I'm doing this today so these candles will talk to you. If you're not familiar with this part of the presentation right now is for the people who not familiar with this. And later on, we're going to go into some more advanced stuff for the people who know exactly what they say right now. The people, you know what I'm saying? The people who can look at this big red candle right here on the left, the one farthest to the left, who can look at that and say, man, that was a bearish time frame. The price open here and they put the sellers just mopped over the buyers. The people who can just look at that and know that. You know what I'm saying? The people who can look at this little green candle to the far right over there and be like, man, the buyers came in strong, but the sellers pushed them back and they end up right where they started at. The one far to the far right over here. People who can just look at that and know that already, you know what I'm saying? They'll be like, you know, that's for, we gonna get into stuff for them later, but right now we gonna get into how you even know how to do that right there, Tim. That's what we getting at right now. All right, so right now, candlesticks. What are candlesticks? Candlesticks are graphical depiction of the price over a defined period, right? Yeah, it do look like Fridays, eh? A graphical depiction over a time period. And notice I said over a period, and I didn't just say a day. I didn't say a minute, because you can every time frame you set your chart to, if you set it to a 1 hour, a 1 minute, a 1 day, a 1 year, a 1 month, the candle's gonna look similar. You're gonna see the same type of candles on every chart you look at, but for that period, it's gonna be it just deals with how much time is encompassed in that period. And I'm gonna show you what I mean in just 1 second. All right, so what does the candle show you? The candle show you the opening price for the period, the closing price for the period, the high price, the highest the price went in that period, the lowest the price went in that period, and it shows you the market sentiment for that period, right? And Tim, how do I know which is which? I tell my kids, this is how I first start teaching my kids. Red means down, green means up, right? So a red candle, the opening, right, is at the top. The opening, at the top of the body, right? The opening is at the top of the body. The body is the thick colored part of the candle, right? Let's move over to one with a top and bottom wick, right? So looking at this one right here with the body in the middle, and it's got a wick at the top and a wick at the bottom, right? So on a red candle, the opening, oh, you know what? I'm tripping. I got a slide that show that. I got a slide that show that, right? Red candles, price closed lower than open, and it usually means it's bearish, right? An uncolored candle means price open and closed at the exact same spot, and it usually means indecision, right? A green candle, the price closed higher than it opened, and it usually means bullish, right? Why do I say usually on this? Because, right, let's go back one slide real quick, because if you look at this candle right over here, this candle right here, this candle with the body at the top, this long wick at the bottom and a little wick at the top, this candle right here, it's red, but that's a really bullish candle. Tim, why do you say that? Because when the price opened up, it opened up here, right? It went up just a little bit, and then the sellers pushed it all the way down here, right? And then the buyers came back and pushed it past 50% of the candle. So that means the buyers are in control now, and they closed it above 50% of that candle. So that's a bullish candle. You know what I'm saying? The buyers took control, but it's still red. So it's the price is lower than when that period opened, but the buyers actually won. They just probably ran out of time for that period and couldn't push the candle back green. So that's a really bullish candle. That's why I say usually. And the same thing if you got a green candle like this one here. The sellers took over control because they pushed it down more than 50% of that candle. So the sellers are in control now. They just ran out of time in that period and they couldn't turn the candle back red. That's a very bearish candle, but it's green. That's why I say usually annotates, or mean not annotates, but means bullish or bearish. But for the most, you know what I'm saying, for the most part, just understand green is up, red is down, right? So let's look at how it look on the candle right there. So you on the red candle, your price open here and it closed. Your price opened here and it closed here. At some point during the period, this is high as it went. At some point during the period, this is as low as it went. All right. With the indecision candle, the price opened and closed in the exact same spot right here. At some point of the day, it went this high. Some point of the day, it went that low, but it closed right there. Right, a green candle, the price opened at the bottom of the body. At some point of the day, the sellers pushed it all the way down here. The buyers fought back and brought it all the way up to here, and then the sellers could only push them back down to here. Right, so that's a real bullish candle. So on green, the opening is the body of the candle. The close is the top of the candle. The body shows you the market sentiment at the time. The top wick shows you the height of the time. The bottom wick shows you the low of the time. And the only difference on the red candles is that the open and the close are reversed. The open is at the top, the close is at the bottom. Hope I ain't confused nobody on that. And we gonna go, I'm gonna jump into Ninja Trader real quick. Go ahead and put, if you got any questions about what I said about the candles with the bodies, the open, the close, go ahead and put that in the chat, because I'm going to pull up Ninja Trader real quick and show y'all what I meant by the time frames in the candles going to look the same, but it just depends on how much it encompasses. Switch over to desktop. Make sure I'm seeing the right, yes, I'm seeing the right desktop. Let me get my make sure I'm in the screen for y'all. Make these candles, make this a little bit bigger. All right, so right now we're looking at a daily chart. This is a daily chart, right? If you look right, you probably can't see it, but up here on the top, where I move the mouse at the top up there, that says daily, right? So each one of these candles represents a day. Every candle that you're looking at, it represents 1 day in trading time, right? So let's do this right here. I'll just draw a new box. I'll draw a new box. I'm gonna take I'm gonna highlight this candle right here, right? So I'm gonna put a highlight around this candle. Click on it. So I'm putting the highlight around this candle right here. This red candle right here with this little red triangle above it. I just put a highlight around that. So I'm gonna change the color so it ain't the same color as the other one. Change the outline color. Put it the same color. I put it white. Really don't matter. Okay, so we highlighted that area right there. So if you notice, I got the highlight around 1 daily candle. It's around 1 red daily candle. The day was red. The price opened at 47. Just say 4,700. I ain't gonna try to get it exact. 4,701. It opened at 4,701. It closed at, let's say, 46.80. At some point during the day, it went all the way up to 47.40, and at some point of the day, it sold down to 47.74. I mean 46.74, right? So that's a day. You got 1 red daily candle, right? So now I'm gonna drop down to a 1 hour chart. I'm gonna drop down to a 1 hour chart, right? So I'm jumping down to 60 minutes. That's 1 hour, right? Now let's find that highlighted area. Boom, there go that highlighted area right there. You see that highlighted area? Now I'm on a 1 hour chart, but if you see, it's a lot more candles in that highlighted area. It was only 1 red candle for the day, right? And it was it finished at like the lower part of the day. It finished at 46, what I said, 46.80. It finished right somewhere around, let's find the time. I can tell you where it finished. It finished right here at 46.80.25. That's where it closed at for the day. Tim, how you know that? Because this big red candle right here that I'm moving the arrow around, if you come to the close of that candle, the close of that candle is at, let me bring my thing in the screen. Hopefully y'all can see it. The close of that candle is at 46.80.25. If you look at this box right here, 46.80.25, you might not be able to make it out. It's kind of small, right? And that's at 1600 when the market closes. So that's how I know what that was. But if you notice, at some point in the day, it took off and the price went all the way up to the top of this box where I highlighted around it, right? And it came all the way down. And during the normal trading hours, remember I had put the candles like right on the low of that. It's a little bit off, but that's right at the low of that regular trading hour candles. The rest of this is kind of after hours and going up through the night, over through the night. But the regular trading day, you know, it went as high as that and as low as that. Those are 1 hour candles. So it was one daily candle. Now you got a whole bunch of 1 hour candles and they all red and green. You have one red daily. Now you got some green and you got some red hourly. If I drop this down to a 15-minute chart, right? And find that shade, they go that shaded area. Now it's even more candles in there. You see, now it's even more candles in the 15-minute chart. It's the same box, but now this is that same time period broke down over 15 minutes. This is over 15-minute chart. The same time period that I had highlighted with that one red candle. Now you got 15-minute candles. And that's what I meant when I said the candles are going to look the same, but it just depends on how much time frame you're referencing on how much time it's covering. And just for that one red day on a 15-minute level, you can see you had a whole lot of action, price action, going up, going down, going up, going down, right? Hopefully I ain't lose nobody going through that right there, right? Hopefully I ain't lose nobody going through that there. Boom. What we going to next? Let's talk about price movement, right? Price movement. Did I lose anybody on any of that? Did I lose anybody on any of that, baby? Did anybody have any questions on that? Let's talk about price movement, right? Price movement. Price gonna move and typically 3 ways, right? You got 3 different types of trends. What is a trend? The trend is the overall direction of the price or overall direction of the market. You know what I'm saying? However you want to look at it. This Tim Rogers thoughts. The trend is overall. Shout out P-Dub in the bed. I just seen something pop in from P-Dub. Amazing mentor. This is the man that really, he took my futures to the next level. Jada Trader taught me futures. Jada Trader unlocked it in my mind that I could really do this. But P-Dub took my futures trading to the next level. Like, just, it's something about when he talked about it, something, because I looked at them ICT videos a million times, and now that I've had a one-on-one with P-Dub and went through some of P-Dub classes in Stocks to Freedom, now when I go back and look at them ICT videos, it make perfect sense. But dig it. Here we go. Overall direction of the price or the market, or however you want to see it. That's the trend, right? You got uptrends, meaning that the price is making consistently higher highs and consistently lower lows. That's an uptrend. And if you look at the chart, it's going to be inclining from left to right. When you look at it, the left going to be lower than the right on an uptrend. It's going to be inclining when you moving to the right, right? You're going to have a downtrend. That's number 2. Downtrends is when the market consistently making lower highs and lower lows. And it's going to be declining when you look at the chart from left to right. So the left going to be higher than the right. It's going to be coming down when you look at your chart from left to right, right? And then you got consolidation. right? Them your three ways it's gonna be moving, right? And that's when the market making relatively equal highs and equal lows, meaning it come up to this price, it come down to this price, it come back up roughly to that same price, back down to this price, back to that same price, and it's just gonna be moving sideways on the chart from left to right. It might be a fat sideways, might be a skinny sideways. It's gonna be a tight consolidation, a wide consolidation, but it ain't making no new highs and new lows consistently. It's the same range. That's consolidation. So you got uptrends, downtrends, and consolidations, right? And you have something they call a pullback or retracement, which is a pullback is. And a retracement, it's like a temporary pause in the trend. Tim, what you mean? You're in an uptrend, right? And then it start going down for a couple days, and then it turn right back down and get right back into that uptrend. That's a pullback or retracement. In Tim Rogers' world, whenever I say pullback, you know that I'm talking about we in an uptrend and you started going down a little bit. If you hear me say retracement, you know that we in a downtrend for that time frame and we went up a little bit. That's how I use the words. I don't care about how anybody else use the words. It makes sense in my mind, because if it's going up and somebody pull it back, it's coming down. And if it's going down and it retrace, it's going back up for a little while. It makes sense in my mind like that. But the main thing about pullbacks and retracements is that they go back and continue the trend that they were in, right? A reversal is a break of the trend. Like if you going up, you got an uptrend, and then you get a pullback that breaks and makes a newer low. And then when it retraces back up, it never go back into the uptrend, and you just start making new lows. You made a reversal. Now you going into a downtrend. And the same thing on the other side. If you going down and you break, you have a retracement and you make a new high, and then when you come back, it don't never make a new low. You just keep making new highs and higher lows. You made a reversal. It reversed. It goes the other way. The price starts moving the opposite direction. The retracing the pullbacks, it paused for a minute and then it continues the direction. The reversals, it paused and then it changes directions. So hopefully I ain't lose nobody on that. So if you look at what I got on the chart here, this is an uptrend. We got an uptrend here. It's going up, 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 and this would be a pullback because it went up, up, up. It came down, and then it continued the trend again. Yeah, right? You went back up. You continued the trend again. This right here would be a downtrend. You're going down, 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 and right here, it pulled back. This is a retracement. But I didn't have anything to show if it continued or not. So you waiting on confirmation to see if this retracement going to break the trend and keep going, or if it's going to reverse and go back down. Right? So that's your pullbacks, and that's your them your trends. Them your trends. Do anybody need me to go to charts and look at that? We'll look at some of that later. We're going to move on to gaps because I've been running my mouth a lot. Let's move on to gaps a little bit. Let's move on to gaps a little bit. And on these right here, what I circled here, this is a gap up, and these are what they call full gaps, right? What is a full gap, Tim? A full gap is when you have a jump in price and the next candle is outside of the body right here. Like this candle here gapped up, and the gap is completely outside the body of the candle before it. That's a full gap. A partial gap would be like if, let me see if I can see a partial gap on here. I don't know if you, right here, this is if you see this red candle right here where the mouse is moving right over here, this red, matter of fact, let me get my pen. See if my pen on. Let me see if my pen on. All right, got my pen on. Okay, so did it move, man? Get back on my pen, man. What you doing? It don't look like it's gonna let me. I'ma circle it, then I'll blow it up. Where the candle at? Okay, so we're looking at this candle right here. I don't like that. How do I clear that? Okay. Okay. So this candle, we're looking at this candle right here. Looking at that candle, and we're looking at this candle, right? So if you see how this candle here, it closed there, but this candle here closed, opened a little bit higher than that close. That's a partial gap. That's a partial, because it opened up within the body of that next candle. It was still, it gapped up, but it was within the body of the next candle. So that's a partial gap. And a full gap is like what's over here. That's a full gap over here. I wish I can, when I blow it up, it won't let me stay on my laser pointer. See, it keeps shrinking. Now it won't stay blowed up on my laser pointer. But anyway, so we're looking at full gaps, and then over here, that's a gap down where it closed there, and then you had a full gap where the next candle opened down, right? Oh, and this is a good point for what I was saying about it's typically bullish, right? So you see here, price was up here, and then we gapped way down here, right? And we closed right here below this red candle. So that's a bearish move on a bullish day, because these daily candles. So you had a bearish move, you gap down, and you close way below your close from yesterday, but it was a bullish day. So that was a bearish move on a bullish day. That's a good example for when I say it's typically a bullish, is typically bullish, but that doesn't change what the trend is going to be. Remember that. Remember that. Okay, gaps. What are gaps? A gap is discontinuity in price, right? What that mean? That means somebody got skipped in the chain. You got buyers or sellers that got skipped when you got a gap, right? Common gaps are the most frequent gaps, right? And common gaps are caused by normal trading activity, meaning normal buying and selling, and it's pushing the price up so fast it jumps over people, right? Gaps can be caused by news events. It can be caused by, you know what I'm saying, like a headline. It can be caused by Fed talk. A lot of stuff can cause gaps. You know what I'm saying? Earnings, expectations on earnings can cause gaps, but the most common gaps are most frequent gaps are common gaps caused by trading activity, right? And they normally fill really soon, especially partial gaps. If it gap up a little bit, it usually will pull back and fill the gap and then continue on. Or if it gap down, it'll retrace, fill the gap, and continue on. They usually fill relatively quick, right? You got what they call breakaway gaps. Breakaway gaps are strong movements through support and resistance. Like if you come up to an area of support and resistance, and then all of a sudden the next day you gap up above that resistance, that's a breakaway gap. It's like breaking out of a consolidation. It's breaking out of patterns. Like if you're a patterns trader, like if you looking at triangles or bull flags or bear flags, or channels, consolidation channels, and it jumps outside of that pattern, that's a breakout gap. If it gaps outside of that, right? I ain't got no picture of that. I wish I did, but I don't. I'm sorry. And you usually see these early in a trend, like when consolidation first breaks out of consolidation, you will have a breakout gap early in the trend. If you forming a bull flag, it's going up and coming down, and boom, jump outside of that flag. It's early in the trend, right? Then you got what they call runaway gaps. Runaway gaps are driven by intense investor interest. Like it's like FOMO. Everybody sees something running up. Like the meme stocks be doing, stuff be running up, and everybody just want to jump in, and then it is usually denoted by like a 5% or more gap above that previous candle. You know what I'm saying? It's like when GameStop and what's Donald Trump thing, what's Donald Trump company name? I don't know, I can't remember. But anyway, when they be running and everybody want to jump in because they seen it on Wall Street bets, and it keep gapping up, those like runaway gaps, right? The mindset usually like it's in the midst of the trend, it's in the middle of the trend somewhere, but everybody got FOMO and they jumping in and pushing the price up, right? Those runaway gaps. And then you got exhaustion gaps, which is like a sharp break lower, and after those run up gaps after them run up gaps, you usually see an exhaustion gap where it done ran up so high, then all of a sudden them exhaustion gaps, I really like to call these the holding the bag gaps. These the ones where you get left holding the bag because you was chasing something on the way up, you got FOMO, and when it got exhausted and it gapped down on you, you got left holding the bag. A lot of people got left holding the bag on a lot of this stuff, a lot of them meme stocks. So those are the different type of, and all of those are like full gaps. Like when you, like I say, when you see like a full, it's a full definite space in between the opening and the closing candle, and it's another type of gap. I don't really know what to call it, the B100, but these the kind of gaps that I trade, right? I was taught this by Jay the Trader. This is how I first learned how to trade gaps, right? It's like when you got 3 consecutive candles, but candle 1 and candle 3, right? Candle 1 right here and candle 3 right here, they don't share a price. That space in between candle 1 and candle 3, that's a type of gap that you can trade. You can trade that type of gap too, because it will come back and fill those gaps too, because it's some buyers in here, because this candle is a red candle. That's number 2 is a really bearish candle. So it's some buyers in this little blue area right here that got skipped, because this candle ended here. The buyers pushed them up from there, right? But over here, the sellers brought them back to this spot at the bottom of this blue triangle. I mean, the buyers got back here, but they couldn't meet back up with their cousins at the bottom of this candle, and the sellers pushed them down. So there's some buyers in that little area that got left, and they money still sitting there. I call these algo gaps sometimes, cause the algo push it down so fast. Like, look at this one here. The algo pushed it down or up. It can be up, but in this case, the algo pushed it down so fast, you got a whole lot of buyers in this area that got skipped. And Tim, why you saying buyers? Cause it's a red candle. When it's a red candle that makes a gap, a bunch of buyers got skipped. When it's a green candle that made a gap, a bunch of sellers got skipped, right? So these are the type of gaps that'll get filled too. So with candle 1 and candle 3 don't share a price. That space in between candle 1 and 3, where candle 2 just took off, the algos made them go crazy, that's a gap in there. So you can trade those gaps also, right? Do we got any questions on gaps? Before the next, what we going to next? Price action. We're going to price action next. Do we got any questions on gaps? Y'all throw some question in the chat if you got question on gaps, man. Price action, right? Come on, what is price action? This Tim Rogers lingo. Now, don't get mad if it don't match up with Wikipedia. Price action is the movement of price plotted over time. That's what it is. It's the price plotted over time, right? What price action? I mean, not price action. All of the chart patterns that people trade, like put some chart patterns in, and I know you know them. Head and shoulders, reverse head and shoulders. Put some chart patterns in there. Bull flags, bear flags, descending triangles, ascending triangles. These are all chart patterns, right? All of these chart patterns are derived from price action, because it's where the price been moving, right? All the indicators that you look at, your RSI, your MACD, your EMAs, your SMAs, all these indicators are derived from the price action. The price action is where the price has gone, and where you can cup and handle is one. You can kind of predict where it's going based off of previous price action, right? Based off previous price action. Let's pull up let's pull Ninja Trader back up and get into it. Let's talk about that a little bit more in depth. Right? Yes, there you go. Desktop. All right, so we're gonna put this on a daily. We're gonna put this on a daily calendar. Oh man, I wish I had that video that I sent. I sent a couple friends of mine a video the other day. Right? And I sent, if anybody seen my story, on what's the name? Anybody seen my story on Instagram? I wonder if I can I pull that up on here? Y'all bear with me. Let me see if I can pull up the old story and I can run it for you. That'll be a good way for me to segue into talk about this price action. Instagram. Can I put I don't think I could pull up previous stories on here on the computer. You can't pull up previous. Can you pull up? God, that dude look funny. Can you pull up previous stories on the computer? I don't think you can. Nah, I can't. Stop. Nah, you can't pull up previous stories on the computer. You can pull them up on the phone. I can pull them up on the phone, but I can't pull up previous stories on the computer. Oh, my sweetie say you can't pull it up if you ain't save it. If you ain't save it, and then y'all, I know I'm tripping because y'all won't be able to see this. Y'all gonna be like, I know this dude don't think I can see this on his phone. Made a new high, swing low, came down. This intermediate low there. That's me talking. Made a swing here, so now I dropped it. We might come back up, do a retracement up to this area somewhere here. Probably get like a 62 to 80 and come back down. So when I was talking to P Dub on this right here, I sent this video out. Right. Made a new high, swing low, came down. This intermediate low there. Broke this intermediate low. Made a swing here. So made a swing here. I'm predicting. And I said we was gonna go back up. Do a retracement up to this area. Right in this area here. Like and then we actually did that. And then we failed. Right here. Connecting with this last. And that's a video I sent P Dub the other day, right? And a couple other people. So what I was telling them in that video was, right, we had ran up from this area here. We had ran up and we had made this swing. We made this swing low right here. And we came down. We made a swing high here where this green triangle here where I'm moving here. Then we ran up and made a high. So we had a high, made a low, right? And we went up and we made a new high. This high right here, where this triangle is here, it broke this high over here. This is like how I see the price action in my head, right? Once we broke that high, we came down to this area right here. Let me see if I can make these a little bit bigger so y'all can really see them. Y'all can really see the what's now. I want y'all to be able to see this, right? So we made this high. We ran up. We made the swing low. We made this swing. We made a swing high here. And what a swing high and a swing low is like you got a candle. This is a daily candle that's got a lower high and a lower high on the left and the right of it. So it swings low. You know what I'm saying? It swings low. It's going. It's swinging low, right? So it's swinging low. Then you come down here and you swing back high. It's swing high. You got a higher high and a higher high on the left and the right, right? I mean a higher low and a higher low on the left and the right of this low right here. So you swinging high. You swing high, right? So then you went up and you made a new high which broke above this high over here. So this new high here broke there, and when you came down, this low where the green triangle is broke this swing low where this circle is. So therefore I told him you couldn't see these candles over here. So therefore I told him that I was predicting we was going to come up to around this area here, which was let me get my fib and show you exactly where I had it marked at. Get my fib. I ran my fib from here to there because this was the low at the time. So I ran my fib from this high and I ran my fib to this low because that was a low at the time, right? And I put a box in between. I put a box in between my 80%, right? I put a box between my 80% and my 62%, right? And I said, I predict that we gonna come up to this area and then come back down and test the area below this down close candle, because this was the last, this little small red candle right here. I said we're going to come down and test the area below this last down close candle right here. And why did I say we was going to do that? Because if you look right here, we got an order block. We got a daily order block right here. That's why I got this mapped out. We got a daily order block coming down to this red candle right here on the bottom left. We got a daily order block there. And Tim, what makes that an order block in your mind? Because that right there is the last down close candle before the run up, the big run up right there. So that's the last down close candle before this run up. So that's my daily order block right there. And as you see, I sent that to him on Wednesday. And then on, what was it? Thursday night, Friday, we took off. We hit that exact area I was talking about. It was because I said anywhere from a 62 to 80% retracement. We went into that area right there. And if you go down into this, you'll probably see it went up and hit some kind of breaker or order block or something. It went up into that area and then it sold off hard all day Friday, and it came down and bounced right off the top of this daily order block right over here. So the price action, since we had went up, we made a high, made a low, broke that high, but came back down and broke this intermediate low. That's what gave me the idea that we want to break down lower, because we came down and we broke this intermediate low right here. We went up to a certain area, we grabbed some liquidity, and then we pushed down. Now we're at the top of this order block, right? So since we done broke more lows, I'm thinking we probably gonna swing back up here somewhere and either get some liquidity here or get some liquidity up here. One of these two areas gonna give us some liquidity, either at this retracement or above this high, and then we gonna come back down here somewhere. That's what I'm seeing. Not saying we're gonna do it this week, not saying we're gonna do it tomorrow, but that's what I'm seeing based off this daily price. Like, daily action takes a little bit of time. Like this time, I happened to read it right when it was ready to happen. You see what I'm saying? It happened right. That's why, you know what I'm saying, you got to understand these counters. It happened soon. So this right here, I went shopping Friday. I got me some IWM. I got me some January 2023 IWM calls. I got me some January SPY calls on Friday. I already had me some XLF 2023. It's 2023 or 2024. I can't remember. I already had XLF, and I got some XLE. I think I got XLE 2023. It's either December 2022 or January 2023. I can't remember. But I went shopping Friday. But I think that's it, man. I think that's it. That's just my little touch on price action. I've been talking a long time. I ain't trying to get too deep in everything. I just want to include something for everybody. Hopefully the new people got something out of it. Hopefully the more seasoned people got a little bit out of that brief look into how I look at price action, how I look at gaps. Hopefully everybody learned something, man. I'm going to move back over the camera only and see if we got any questions. Do we got any questions? Yo, Friday was a big shopping day, Uncle Charles. Oh yeah, P-Dub say ZB at a bearish order block. ZB at a bearish order block. And in the bonds, in the equities, they usually move like inverse to each other. You know what I'm saying? Over time. It ain't gonna be minute by minute, but over time they move inverse to each other. Bonds going down, equities going up. Equities going down, bonds going up. They usually move inverse over time. Yeah, I'm saving it. Only time I don't save is when I say I'm not saving. I usually save every Tim's tidbit unless I say I'm not saving it. It's getting hot under this light. I'm gonna turn my fan on, y'all. Excuse me. Any questions, baby?
No. Now _Dan said if it get too good, you're not gonna save it.
Oh no, I don't save it just cause it's good. So if I say I'm not saving it, then I'll save it. Hey, tomorrow my sweetie birthday, man. Y'all tell my sweetie happy birthday, man. Yeah. Lean over there, girl. Let them see your pretty face. Tomorrow my sweetie birthday, man. It's my sweetie birthday tomorrow.
All right. Friday was a big shopping day.
Yeah, that Uncle Charles said Friday was a big shop. Oh, and hey, I hope y'all tapped in. Uncle Charles put on his story. Uncle Charles said it was a lot of gems in this episode. In the last Come Up series episode, Uncle Charles said it was a lot of gems. So you know what I did? I went back and looked at it again. When Uncle Charles speak, I listen. You feel me?
Laffy Truly said this was awesome. Thank you.
Thank you, Laffy Truly, for tuning in.
Punchboard and Countersunk said many thanks. Good to go.
Thank you, Punchboard and Countersunk. Thank you for tapping in. Thank you for the happy birthdays. Everybody showing my sweetie love.
Thank you.
She said, thank you. Thank y'all for showing love, man. And share this with as many people as you can.
Ada27 say run that swing low explanation again. How you were confident to downtrend.
Okay, he said the swing low explanation. How was I confident to downtrend? Let's go back to desktop. Okay, so looking at, okay, we had a bullish order block over here back on between the 27th and the 28th of October. Then we had a strong run up, right? We had a real strong run up. We had a slight pullback, and we made a swing high right here. Then we had a semi run up. Then we made another swing high right here, right? We made a swing because you got the higher low, and this the lowest low of that swing, right? When we got to this point, we broke this high over here back on the 5th of November. So we broke this daily high right here on the 5th of November, right? And once we broke that daily high, we had some strong selling activity. You know what I'm saying? It pushed that day way back down. And then the next trading day, we pushed way down and we broke this intermediate swing low right here. So this low broke this swing high. I mean, this intermediate low here. We broke this intermediate low, which formed the swing high. And this area, which formed the swing high, had broken that intermediate low. So that right there is giving me, it's like what they call that, P-Dub, a break in market structure. I think they call that a break in, correct me if I'm wrong, P-Dub. I think they call it a break in market structure because you're going up, but then you made a new low right here. So when we started that gave me the indication that we wanted to go lower. So once we made that, I ran my fibs from this high right here to this low that broke the new low, and my area was between 62% retracement and 80% retracement. That's where I drew that box because I was looking, because 62% retracement is like the most regular spot that the price gonna react off of, but it can go all the way up to like 70 or 80, right? So that's why I give it a range. I don't ever try to get it exact on a dime. So once it hit this area right here, you see the price reacted violently, pushed it down. Then the next day, phew, we came all the way back down to this bullish order block from back on the 25th. So now if you see, we bounced off of that bullish order block, but it wasn't like a whole lot of pushback. So now I'm still thinking either we may keep going down from here, or we're gonna retrace back up to this area of 62 to 80 and grab some liquidity, then go back down, or we're gonna go back up and retest this high to get liquidity and then go back down.
The relationship account said, do you see more downtrend?
Yeah, it said, do I see more downtrend? And I just explained that I'm expecting to see it to pull back because we broke another low. So I'm thinking we're gonna go back and grab some more liquidity and pull back, because we still haven't had a real pullback on the S&P yet. And so they may just 2-3% us at a time, or they may just go ahead and give it to us, hit us with the molly wop right before the Santa Claus rally, because they know the big boys know everybody was looking for it in October, and they didn't give it to us in October. They only gave us like, I think 5% right at the end of September, beginning of October, and then October ran like crazy. When October is usually one of the worst months for the S&P and it gained, I think it gained like 7%, if not more.
Now underscore Dan say you doing the Lord's work this Sunday.
I appreciate it. Now underscore Dan, I try to do the Lord's work every day.
All right, so that's it. Not any other questions. Somebody say you need to watch the inner videos, inner circle trader videos, all of them. It's a lot, but watch them all.
Oh yeah, inner circle is
Trader.
got some fire. Yeah. Oh yeah, this is the ES. I'm sorry, we was looking at the ES.
They answered it. Somebody in the chat, they answered it.
Okay.
P-Dub answered the question.
Appreciate you, P-Dub. I see you answered that for me. Oh, and just one thing for anybody that just really tapped in with me. I used the ES. I watched the ES to make my option decisions on the SPY and on the SPX, because the ES, the SPY, and the SPX are all the SPX. They all the S&P 500. The ES are the futures for the S&P 500. The SPX and the SPY is the ETF, and the SPX is like the options for all as for the S&P 500.
You damn Libra say, what do you use to show confirmation for before getting into a trade?
Okay, before confirmation getting trade, I typically, let me see. It's a couple ways you can do it, but the way what it say, you're under Libra, you're Libra. Some Libra who asked the question about what I use for confirmation getting into trades. It's a couple different ways you can do it, but my personal way of getting into trades is, let's drop down to the old trusted 15-minute that I like to use. All right, so let me go back to the daily and put my fibs back on. It's a couple different ways I do it, but I'm gonna show you a way of how I do it with my fibs. So with my fibs, right, I go here like this, and then, oh, let's do this real quick. Since we're doing this here, I'm gonna download. I'm gonna show you how I do it with my fibs. I'm gonna download. Where's my I'm having a brain cramp. Oh, I need the other bar. That's why. Okay. Historical data. Market replay load. Let me see. Get replay data for the ES. We're gonna go to what was Thursday. We're gonna get the 24th download. Right now I'm fun to go, but I'm going through. If don't nobody know what I'm doing right now, I'm in Ninja Trader and I'm downloading replay data for the 24th to 25th for last Wednesday, Thursday, and Friday, and then I'm gonna go through and show how I would make an entry on getting in. Go ahead. They got a question.
Wall Street Consortium says, keep an eye on XLV. We will hit with all types of news on health for the next 3 months to see how we handle COVID through the holiday news and sentiment.
Oh, Uncle Charles just dropped the gem on healthcare. He said, I don't know if y'all heard my sweetie, but she said, Uncle Charles post said, keep an eye on XLV. We will hit with all type of news on health for the next 3 months to see how we handle COVID through the holidays, news, and sentiment. When Uncle Charles speaks, I listen. All right, so I downloaded last week. Go ahead, it's question. Okay, so now what I'm gonna do, I'm gonna come up here to connections, and then I'm gonna go to playback connection, right? I got to close my other connection first, disconnect. I'm gonna go to playback connection. Go now, boom, it pops me into the playback. Now I'm in the playback connection, right? I'm on playback, and I'm gonna set this to let's go to Thursday. Friday was the drop, so let's go to Friday. We're gonna go to Friday, right? Then we'll hit play. Did it play? Okay, let's go back to Thursday. We're gonna go to Thursday. Stop. Yes, go to Thursday. Might need to go to Wednesday. Do I need to go to Wednesday? I'm trying to get them candles out of there. Okay, here we go. Go to Wednesday. Those candles are out of there. All right. So let me run my fibs. This was the high right here. Down to this low right here. Run my fibs. Right. So we playing it. So what I would do when I'm running my fibs, I got this on a daily level right here, right? And I'm looking for anywhere from a 62 to an 80%. Let's just cut it in half and say 70s, right? So I'll come up here to the area where we're going to do a 70 this time. And I'll right click on the screen. That price is what that is. 47.1350. I'll right click on the screen and I think it's going down. I'm using my field. I'm not using the field to tell me where to get in. I use the price action to where I think it's going to go. And so now I'm going to set a sell order at that area, right? It's order submitted. You heard it say order submitted. So I got like a sell order in place right there at that area right there. And now we're going to fast forward this in time. We're going to fast forward this and let this play out. Hold on. I'm going to drop down to like a 15-minute. Hopefully it don't go crazy on me. I'm going to drop down to a 15-minute and then I'm just going to let this run. I'm going to fast forward this and let it run. So now you got the candle, move these fibs so it won't be in your way. Now you see the candles. The candles are, and you can do this for back testing too. This is how you back test too in Ninja Trader. Now you see the candles are like printing. I got my order in right here because I think it's going to Some sound like it's cracking. Don't it sound weird? I got my order in right here because I think it's coming back to here. So I already got my order set where I think it's going to come to. So now it's like printing. Now it's a 15-minute chart. I already got it set. It's going. And then we're going to see if I get picked up.
Boy said, what's your stop loss?
My stop loss is 20 ticks once it hit. You'll see it pop it out if I get picked up. Right, it's boom, I'm picked up. I'm pausing it right now. So I got my ATM set up to give me a 20 tick stop loss, and then it's a 44 tick what's the name?
And it's in your sim account, right?
And this is playback. Yeah, this
from the other day.
Yeah, when you put it in playback, it automatically puts you in sim mode, even though it still look gray like the real Ninja Trader account. Playback only works, and if you look over here, it says playback account right over there where it say account type. It's a simulated account. So I paused it. So now I'm gonna let it keep running. I'm gonna let it. Let me slow it down a little bit to like I'm putting on 500%. Let it keep running to see where it go. So now it's running. Hopefully it don't stop me out. Hopefully I picked a good spot and it won't stop me out. I hope I picked a good spot where I won't get stopped out. I'm taking 13 ticks of heat. 5. Oh, it don't look like it stopped me out. I took some heat on that. I would have been sweating a little bit. I had 13 ticks of heat. And then I got it. Okay, I'm going back up. Took a little bit more heat. I might need to speed this up a little bit more. Put on 1,000%. There you go. Now see that my cha-ching, what that did, my ATM just came down and it saved 5 ticks. That cha-ching, it came down and saved 5 ticks because it moved 25 ticks, right? And so now if this trade comes back and goes the other way, I'll have 5 ticks of profit per contract that I got on. Right? Let's see if it keep going and meets my full target, or if it's gonna come back and stop me out. Gonna let it keep playing.
Somebody asked Spider Select, but Senior T's is saying all the ETFs are like XLK Tech.
Boom! It hit my target. There you go. And then I will pull it up and show the target, but I don't want y'all in my business looking at my money.
Look, now I want to go then. So you was getting nervous in that sim trade.
Oh yeah, I get nervous all the time. That's why I don't sit down and watch it. I be getting nervous. Even if it's sim, I be like, oh, I'm about to get stopped out. That's why I don't watch it, man. That's one way I use to now let me real quick I'll show another way to be able to get in on a trade not using fibs, right? So let's come back here, right here. So let me show you another way I would get in on a trade not using fibs, right? Just using price action. And I know it looked like, oh, Tim, this hindsight so you can see it, but this is what I actually do, right? So here we go. We got this, you see this run up right here. Boom. We got a strong run up. We made a swing high right here. Right over here. I don't know if you can see it. Right here where I'm moving. Let me see. Let me get triangles. So,
Boy said, if you ever let it breathe once you get up 5 points and extend the take profit.
Yeah, he wanted me to know if I'll extend the take profit. So what I do sometimes is once it get farther enough away, and usually with the ES, if it's like 5 points away or like 20 ticks, if it's more than 5 points away, it's probably not going to come back and stop you out unless it's time for a reversal for that trend. I mean, for that time frame. So what I do is I'll start to ride my stop loss down and extend my profit target to get more, to make more money on the trade. Like just say if it get to my 40, it's at 40 ticks and I think it's fun to keep running, right? I'll set my stop loss at 25 ticks and slide my profit target down to 60 ticks. If it get down to 50 ticks, I'll slide my stop loss down to 40 ticks. I'm tightening my stop loss up and slide it to 70 ticks. If it get down to 60 ticks, I'm gonna slide it down to 50 ticks, maybe 55 ticks. I'm tightening that stop loss up to save more and more profit, and I keep sliding that target down to get more and more profit out of the trade. But I'm constantly riding that stop loss down to save more and more profit every time I move it. I ain't 20 ticks no more. I done went to 15. I done went to 10. I done got down to 5. I'm tightening it up. But yeah, we had this. I was supposed to be trying to make a triangle. I'm trying to show right over here. Let me see. I'm just going right here. We made right there. We made a swing. We made a swing high here, right? And then okay, so we came up here. We made a swing low up here. So we swing. Whoop. Boom, swing there. We came back down right here and we broke over here. This swing right here broke this swing right here, right? So this swing broke this swing and made a new low. So now I'm thinking, hey, we want to keep going down, right? So I would run my fibs, but I ain't gonna do it off fibs. I would run my fibs from this high to this low, right? And look what we came back to. We came back to that 70, right? But I ain't doing the fibs this time. I would run my fibs, but so instead of running the fibs, you could look at the price action, right? So we came here. This right here is the last down close candle before this run right here. This big candle right here is the last down close candle before this run up, right? So when it come down, right, to this down close candle here, boom, it hit there, and then this could be the point where you would be looking to go short at the bottom of this down close candle, because you see what I'm saying? It's like, boom, you can get in there, or you can get in, you can use this down close candle from this leg of it, because you got the consolidate, or like this one here, like this. It's one of these in here is like a breaker. I don't understand that old breaker part of it, but one of these red candles in here is like a breaker, but I don't get that part of it. But you can be looking to go short here for a confirmation of, okay, we went up and now we're breaking down, we closed, and you can use either this candle here as your entry or this candle here as your entry point to go down, depend on what your risk tolerance is. Me, I'll be trying to get in off my retracement up here, or I'm gonna be trying to use this first red candle as my confirmation. We pushed up, we had strong seller pushback here, and then we had a full red candle here, so my entry is going to be This is going to be my entry if I'm using the candles as my entry. That's my entry right there. The bottom of that candle is my confirmation based off the candles, right? My confirmation based off the fib would be up here somewhere based off my retracement. My confirmation based off of this last down close candle would be right here, the close of that candle. So in between these two candles here, that's my entry based off of this down close candle. This right here is my entry based off of the confirmation down, and right here will be my entry based off my fib retracement, all based off of this price action coming from here up to here, up from this swing to that swing, and then breaking this swing over here. Hopefully I ain't confused nobody.
Rodriguez Milano, is TWAR stop loss determined by 100 IVL or of the fib, or do you always do 20 ticks from your entry?
Sometime I like my 20 tick is my standard, and if my 20 tick is more than the fib, the 100 on the fib, if it go outside of the fib, I'll move my stop loss to whatever the fib is, because that's gonna help me have a smaller loss if the trade goes against me. But if my 20 ticks, if my 20 ticks is inside that fib, I don't move it outside, because 20 ticks is the max I'm gonna give them.
The breaker will have to take out a high and a low. That's what Boyd said.
Oh, okay, then appreciate that, boy. Boyd said for it to be a breaker, it would have to take out a high and a low. Yeah, I still don't understand the breakers. I'm still learning that. I appreciate that, Boyd. Shout out Boyd in the building. He part of S2F2. I give him a hard time, but he an awesome trader, man.
The mitigation block is when the OB is violated and closes below.
Okay, Boyd dropping some gems. He said the mitigation block is when the OB is violated and crosses below. Closes below. I'm sorry.
That's it.
All right, man. It looked like that's it, man. I appreciate everybody for pulling up. Like I always say, each one teach one. If y'all ain't did it by now, you should have did it. If you do something, drop it in the chat. Shout out all my friends and family that pulled up. Love the fact that what Charles saying. I love the fact that work together to bring info. Yes, sir. Yes, sir, Uncle Charles. Gotta work together. Friends and family alike. We all family, man. They done tried to keep this information from us for too long. But people like yourself, my great sir, people like Peter, people like Boyd, people like Kiki Williams, like Stock Zay, Learn with Lex, Finance Old Fleet Draco, Shanisha, what was it, baby? Shanisha. Changing lives. All these great people, man. Mark and Jolene. Who else? The Wall Street Trapper. Who else? The brothers at EYL. The brother Ian Dunlap. He a good brother. I can't take nothing away from him. I'll leave it at that.
Session. Thank you.
All right, y'all. I'm getting old and I get the rambling, so we're gonna wrap it up. Hold on. I got my sweetie lead in. Hold on. Go ahead, baby. Go ahead, Lee. Come on now. My baby lead in. My baby said bye. You gonna sign us out, baby. Y'all know what it is. This has been an episode of Tim's Tidbit. Thank y'all for tapping in. Till the next time, we gone. Yeah.